This rally is not gonna stop. There isn't enough FUD in the space to stop the history that was made in the last 24 hours. Welcome back to DHN. My name is Wade. We have a lot to discuss here, ladies and gentlemen. Now, I was gonna get on here and rant about the lack of journalistic integrity on behalf of CoinDesk and Cointelegraph, but when I dug back into this story, because I originally remember posting this yesterday, I wanted to wait, because this was definitely a situation where haste made a lot of waste. All right. You can see in the last 24 hours, ever since in the early hours of the morning, apparently CoinDesk must have posted this right around that time, which caused a lot of confusion in the market, caused the price to pull back. As we wake up, though, in the early hours of the morning, I'm recording this around 10 a.m., clarity is setting into the market and people are understanding what the truth actually is, because CoinDesk and Cointelegraph, they're deleting posts and articles because the community attacked. Now, if you're unfamiliar with the situation, let's just break down what's going on. And I'm going to go over to CoinGape, because as of right now, this is the only crypto publication that published the story. Hedera and ArchX enable first tokenized BlackRock MMF shares. What we have is a situation where Hedera partner ArchX came together with a company called Onera. These two, working on behalf of BlackRock, needed a platform to tokenize the asset. We all know that BlackRock has been talking up tokenization for a number of years now. All right, this tokenization thing, these real world assets, let me be completely clear. This is not new. This is not new science. As a matter of fact, let me show you this here. Private Markets, Digitization, the Institutional Handbook. Okay, this is how long, you see that, 2020. This is how long that this has been in discussion, guys. But we'll dig into that later. Simply, ArchX, a digital asset exchange broker and custodian based in London, has expanded its tokenization services to the BlackRock ICS U.S. Treasury Money Market Fund. This undertaking is implemented in cooperation with the HBAR Foundation and is a major step forward in the merging of traditional financial assets with blockchain technology. Now, I think what went wrong, and we're going to go over to HBAR Foundation's post, and this is no disrespect to you, Sabrina, okay? You were just reporting on history-making information, and maybe your emotions were involved here. But I think the confusion lies in the first couple of sentences, where they say that ArchX today announced that it is expanding the range of fund shares it offers in tokenized form with the provision of the BlackRock ICS U.S. Treasury Money Market Fund in partnership with the HBAR Foundation. I think the majority of people read BlackRock ICS U.S. Treasury Money Market Fund in partnership with the HBAR Foundation. Had she had unpack this differently, and again, no disrespect to you, darling, I think we would have had a different impact. All right, nothing against the HBAR Foundation, nothing against you who wrote this article, but I believe that is where the confusion sort of started. All right, but let's finish this out here, because CoinGape, like I said, they have the best article on the market right now. ArchX, the first FCA regulated entity of its kind, has tokenized money market funds from Aberdeen in the past, working with both Hedera and Ethereum blockchain. The inclusion of MMF of BlackRock into this online platform provides new options for liquidity and investment. The process of tokenization enables MMF shares to be traded on the ArchX platform and via connected networks, thus increasing accessibility to institutional and professional clients. So ArchX is the player that was already in the Hedera ecosystem thanks to their relationship with Aberdeen, which, if I'm not mistaken, is the council member in this entire situation. So they've had experience with tokenizing on Hedera. As a matter of fact, when Aberdeen got into the governing council, that was their biggest focus, was to tokenize as many financial products as they could, right? On the subject of BlackRock, like I said, guys, I've shared this clip as many times as I could. I would pull it up here, but we got a lot to discuss. Simply, Larry Fink said after the launch of the Bitcoin ETF, the spot one, he said, if we can ETF a Bitcoin, imagine what we could do to all financial instruments. And that's the bigger game here, guys. And then there's a third company called Onera. Now, this is when the article gets into what their role was. And I want you to pay very close attention to FinP2P Digital Asset Network. The initial transaction of these tokenized shares was performed through the Onera FinP2P Digital Asset Network, demonstrating the real-world utility of this emerging technology in today's market environment. The digital and blockchain integration of traditional money market funds as a result gives us a safe and smooth way to which these financial instruments will be managing and trading. Onera is a very interesting company, ladies and gentlemen. Let's just go over to their website. This is really what prevented me from speed reporting this article like a lot of people did yesterday. Onera, interoperability, distribution, and liquidity for the global tokenization market. What do they do? Essentially, they're looking to address all of this money right here. Private debt, 250 trillion. Private real estate, 317 trillion. Equity, over 98,000 firms. Yes, I'm only highlighting the private statistics because that's really where we need to keep our eyes on. Now, Onera led a group of 70 financial institutions and fintechs to design FinP2P, an open source, decentralized protocol interconnecting all platforms. What do they mean by all platforms? Any blockchain or traditional ledger, any issuance or exchange platform, any custody technology, any settlement currency, any regulated compliance engine. So, when we are discussing interoperability, connected networks, unified ledgers, interledger protocols, it's a situation where it's not that they are the thing to be created, it is the thing to be used. If that makes sense, ladies and gentlemen. Simply, what happened here? ArchX, in collaboration with Onera, on behalf of BlackRock, used Hedera's technology to tokenize an investment fund that is open to everyone. So pretty much anyone could have done this at any time. Any asset in the market could have done this. Ripple, Stellar, anywhere. XDC, it could have happened anywhere. Algorand, it could have happened anywhere. The fact that ArchX and Onera decided to use Hedera is the key differentiator here. That's the history making part, because they could have gone anywhere. They could have gone to Ethereum. They've done it before. But clearly, the reason they didn't go back is because one has an advantage over the other. Now, the reason why I am making sure you understand the relationship between ArchX and Onera is because I also discovered this right here, ladies and gentlemen. So last month, it was announced by ArchX, Onera, and Global Digital Finance that a GDF Tokenization Forum was going to be open to global digital asset investors. This first one took place last month. No, not last month. It's April, fool. It took place in February. However, the second session is happening tomorrow. That's why I was thinking in April. But what is the point of this session? Well, the Tokenization Forum is a forum open to global digital asset innovators and will convene industry experts from leading fintechs and financial institutions to discuss emerging trends and insights in the tokenization of real-world assets and the evolving tokenization strategies across different asset classes and markets in financial services. Now, they immediately go into Larry Fink's quote, CEO of BlackRock, where he said that tokens are the next generation for markets and estimates the tokenization of real-world assets will unlock 16 trillion of assets for greater access to investment and trading. Now, under the governance of GDF, this is where it gets deep. Onera led the development of the open interoperability protocol called FinP2P to solve the problem of tokenization, interoperability, and distribution. By deploying FinP2P routers, institutions can enable instant trading and settlement across any asset class ledger and digital payment rail. Let me read that again. Institutions can enable instant trading and settlement across any asset class ledger and digital payment rail. For example, JP Morgan and HQLAX, Onera, and WeMatch Live are in the process of launching an intraday repo platform that executes delivery versus payment repo transactions across two different distributed ledger technology platforms at HQLAX and JP Morgan using the Fin P2P routers. HQLAX still need to dig more into that company, but we know what JP Morgan is coming to the market with. Onyx blockchain, Quorum. Keep on walking down that path, you'll lead to XDC. Makes sense why XDC has already been in this conversation. But let's keep going here because Archax has some business to attend to as well. So Archax is focused on providing the products and services needed to bring the benefits of the crypto and digital asset space to traditional professionals and institutions. It is currently working with 10 leading asset managers and 7 blue chip banks on tokenized collateral transfer and fund tokenization projects, which emphasize the industry move to using blockchain technology for handling real world assets in a streamlined and more efficient manner. An example of this is the tokenized money market fund that it launched with partner and strategic investor Aberdeen last year that we know about. But furthermore, Archax announced plans to launch crypto trading pairs against money market funds. This means that professional clients will be able to hold assets in regulated MMFs earning yield and then trade directly against leading unregulated cryptocurrencies without the need to convert into another asset like fiat first. This is the end game here, ladies and gentlemen, that everyone is completely overlooking. The fact that Archax and Onera chose Hedera, not BlackRock. I'm not telling you that BlackRock chose Hedera. However, there is information out there that will confirm that they had to sign off on the press release, so clearly they're aware. Archax and Onera are the ones that you want to pay attention to. This is the real relationship. Let me remove this. This is the real relationship between a crypto company and a traditional finance company. Onera, again, is looking to connect the traditional financial markets with the digital financial markets. And they are coming, ladies and gentlemen. Archax, on the other end, wants to provide trading against these money market funds. So, with Hedera being chosen first, you don't think they'll end up as one of the pairs? We're up 40% now. We're at a, $4 billion market cap? Let me check this out. Yeah, $4.5 billion market cap. What is that going to look like when we start seeing trading pairs Hedera against the tokenized MMF, right? That's the biggest part of the story here, guys. But I got one more for you. So there's a gentleman, and I had to dig for this one, ladies and gentlemen. There's a gentleman, Amin Ben David, founder and CEO at Onera. He published an article in 2022 called The UniFi Theory of Digital Financial Markets. I'll leave a link to it in the description and the pinned comment. I will make sure of that because I'm not going to go through the whole thing because I want you to read this yourself and you tell me what you think this is going to lead to. This description right here from the CEO, from the owner, the founder, this is the Fin P2P routing network that was used to transfer the tokenized asset. So, just to explain the process, Archax went to Hedera with BlackRock's MMF fund. They said, hey, we need to tokenize this. Hedera said, our tech's open source, do as you wish. Archax then proceeded to tokenize the MMF that they received from BlackRock. And once the MMF was tokenized, it was removed, theoretically, from Hedera, passed over to Onera, put onto the Fin P2P routing network, and now it is traded on a global marketplace. So, bringing us back to the original point, the way we value these assets is changing. I'm no longer saying that it has to change. Ladies and gentlemen, it is changing, and that is what we are seeing. So, the bigger story here is not the lack of journalistic integrity when it comes to Hedera or reporting on utility projects altogether. The bigger story here is that we are on the right path. There's a reason you were drawn to the assets that you're drawn to. Don't ever forget that, ladies and gentlemen. There's a reason why I'm drawn to these assets. It's because they are connected to something much larger that people still do not see coming. Just wanted to address, yes, usually I have my camera for this one, but I'm saving that camera for, bigger projects, things like that. I'm going to go back to the old way of doing things because it's a lot more efficient. Now that I've done this for a number of years, I understand why things need to be simplified. But with that, guys, you know what I'm finna tell you. If that money is digital, so is the hustle.